What if the real war happening right now has nothing to do with missiles or soldiers? What if the most dangerous battlefield in the world today is completely invisible to most people? I am Kundi, and on Pulse America News we are about to pull back the curtain on something that the mainstream media is barely talking about. Because right now, while everyone is watching explosions and military movements on their screens, a completely different kind of war is being fought behind closed doors. A war over gold, a war over the dollar, and a war that could reshape the financial future of every single person on this planet. Let me break this down for you in a way that actually makes sense. Right now, the world is dealing with serious conflict in the Middle East. Iran, Israel, and the United States are all involved in a tense and dangerous situation. But here is what most people are completely missing. Behind all of that, two of the biggest powers in the world are locked in a financial battle that is far more dangerous in the long run. On one side, you have the United States, the current global superpower. On the other side, you have China, the country that is working every single day to become the next one, and the weapon they are both using right now is gold. Here's what has been happening. China has been buying gold at a speed and scale that is almost impossible to believe. They have been purchasing it so aggressively that gold prices were already sitting at record highs even before the current conflict escalated. Think about that for a moment. Before a single missile was fired in this latest round of tensions, gold was already at its peak. That alone tells you something very important about what China has been planning. Now, when conflict breaks out anywhere in the world, investors and billionaires do what they always do. They run towards safety. And in times of global crisis, two things traditionally become safe havens. One is the US dollar. The other is gold. Stock markets around the world have been crashing. Inflation is at levels that are genuinely painful for ordinary people. Airline stocks are collapsing. The cost of everything from hotel rooms to flight tickets has gone through the roof. Fuel prices for jet engines are sky high. And all of this is feeding into a global economic crisis that is getting harder and harder to control. Now here is where it gets really interesting. Gold prices, which were already high, were expected to go even higher once this conflict began. With all this chaos in the world, prices should have easily climbed toward record territory. And in fact, that is exactly what was happening. People were buying gold everywhere. Billionaires in Gulf countries were loading up. China was buying aggressively. Regular Chinese citizens were choosing gold over almost every other investment option. The entire market was moving in one direction, upward. But then something unexpected happened. Gold started crashing, and you have to ask yourself why. Why would gold crash in the middle of a global crisis? That goes against everything we know about how markets behave during times of war and uncertainty. The answer to that question reveals everything about the hidden financial war being fought between the United States and China right now. Here is what happened. The US Federal Reserve Chairman came out and made a very clear announcement. He said that interest rates would not be cut. They would stay exactly where they are. And the moment that statement hit the news, gold prices began falling sharply. This was not an accident. This was a deliberate strategy. Let me explain the connection between interest rates and gold prices because this is the key to understanding everything. When interest rates go down, bonds pay less return to investors. This makes the dollar weaker. And when the dollar gets weaker, gold becomes more attractive because people look for somewhere to store their wealth. So gold prices go up when interest rates go down. On the flip side, when interest rates stay high, the dollar remains strong. Investors keep their money in dollar-based assets, and gold prices fall because the pressure to escape into alternative stores of value becomes lower. So by announcing that interest rates would not be cut, the United States was essentially firing a financial weapon directly at gold prices. They were sending a message to the market. The dollar is strong. Stay with us. And gold began to fall. But why did the United States want gold to fall so badly? Because China was using gold as a weapon against the dollar. Think about this carefully. If gold prices keep rising, it signals to the world that the dollar is losing its credibility. It tells investors that they need to find alternatives. It weakens the entire foundation of American financial power. And China knows this. That is exactly why they were buying gold so aggressively in the first place. There is another layer to this story that makes it even more alarming. Iran has reportedly begun demanding payment in Chinese currency for its oil, not dollars, yuan. The message they are sending is that if you want Iranian oil, you need to use the Chinese financial system to get it. This might sound like a small detail, but it is actually enormous in its implications. Here is why. Approximately 30% of the world's oil and gas supply passes through the Strait of Hormuz. That is the body of water that Iran effectively controls access to during periods of conflict. If Iran starts requiring payment in Chinese currency for that oil, countries around the world will be forced to hold Chinese yuan in their reserves. And to get yuan, they will have to sell dollars. Do you understand what that means? It means a slow but very real erosion of the dollar's position as the world's reserve currency. That is the entire foundation of American economic power, and it is being quietly targeted from multiple directions at the same time. China is buying gold to drive up its price and signal dollar weakness. Iran is demanding yuan for oil to force countries away from the dollar. Russia is watching and waiting, hoping that American domestic economic pressure will eventually force a political change. And in the middle of all this, regular people around the world are paying more for food, fuel, flights, and everything else in their daily lives. The billionaires in the Gulf region saw this coming. They had already been buying gold when prices were at $3,500 and $4,000 per unit. They were positioned perfectly for the price spike, and now that the United States is crashing gold prices through its interest rate strategy, those same wealthy investors are not panicking. They are sitting back and waiting, because they know something that most ordinary investors do not understand. Gold that you buy today at a crashed price is gold you can sell in 10 or 15 years at a price that could be dramatically higher. The United States can suppress gold prices in the short term. They can make statements. They can keep interest rates high. They can have their financial institutions sell gold into the market to drive prices down, but they cannot change the fundamental reality that gold is a finite physical resource. And China is playing a long game. China is not buying gold to sell it next month. They are buying it to hold for a decade or more. They are accumulating reserves that will put them in an extraordinary, powerful position in the future global financial system. When you hold gold, you hold real wealth. When you hold dollars, you hold a promise. And right now, a lot of the world is questioning how solid that promise actually is. Here is another piece of this puzzle that almost nobody is talking about. China controls a massive portion of the world's rare earth elements. These are the materials that are essential for modern technology. Electronics, batteries, military equipment, and almost everything that makes the modern world function requires rare earth elements. And China sits on top of most of the world's supply and controls most of the world's processing capacity. Gold is just one more layer on top of an already extraordinary position of resource power that China is building. Now let us talk about what this means for ordinary people and for global events that everyone can actually see. Take the upcoming FIFA World Cup being held in the United States and Mexico. Millions of people from Asia, the Middle East, and around the world were planning to attend. Airlines had priced their tickets assuming certain fuel costs and certain levels of global stability. Neither of those assumptions is holding anymore. Fuel prices have surged. The geopolitical situation has made Middle Eastern transit hubs uncertain. Emirates, Qatar Airways, and Saudi Arabian carriers handle a massive portion of international travel between Asia and the Americas. If tensions in the region remain high, the travel infrastructure is disrupted. Ticket prices have already gone up significantly. Hotels are more expensive. The entire experience of attending the World Cup has become dramatically more costly for the very fans who were most looking forward to it. This is what economic warfare looks like in real life. It does not just show up in trading charts and financial news. It shows up in the price of a plane ticket. It shows up in the cost of groceries. It shows up in the rising price of everything that ordinary families need to live their daily lives. Now let us look at how the United States is trying to manage all of this. On one hand, they are using the Federal Reserve to signal dollar strength and crash gold prices. On the other hand, their political leaders are making public statements designed to move markets. When statements come out suggesting that the conflict might be close to resolution, oil prices drop. When statements suggest escalation, prices rise. These communication strategies are being used deliberately and skillfully to try to manage the economic fallout of a conflict that is genuinely spiraling in directions that are hard to predict or control. Japan is a perfect example of how this economic pressure is playing out internationally. Japan already has one of the world's most stressed economies. They have been dealing with slow growth, high debt, and demographic challenges for years. The current global situation is making everything worse for them. Fuel costs, supply chain disruptions, and trade uncertainty are all hitting Japan hard. And yet American political leaders have been pushing Japan to take a stronger position in support of US military actions in the Middle East. The result is that Japan's leadership is in an incredibly difficult position. Domestically, the opposition to getting involved in foreign military conflicts is overwhelming. Surveys suggest that close to 98% of the Japanese public is against involvement, because ordinary Japanese people understand that getting drawn into a Middle Eastern conflict would be economically devastating for a country that is already struggling, and that is the pattern you see everywhere you look right now. Governments are being asked to take sides in a conflict that their own people strongly oppose, because their people understand, instinctively if not analytically, that more war means more inflation, more economic disruption, and a lower standard of living for everyone who is not a billionaire with assets spread across multiple safe countries. Meanwhile, China continues its strategy. Every time gold prices fall because of American pressure, China treats that as a buying opportunity. They are not afraid of volatility. They welcome it. Lower prices mean they can accumulate more gold for the same amount of money. They are playing a game that is measured in decades. The United States is playing a game that is measured in news cycles and political terms, and those two time horizons are fundamentally incompatible in a financial competition. Here is what all of this tells us about where things are heading. The current situation is not stable. It cannot be maintained indefinitely. At some point, one of several things will happen. Either the conflict in the Middle East will de-escalate and some of this economic pressure will ease, or it will escalate further and the economic consequences will become severe enough to force major political changes in multiple countries, including the United States itself, or the slow erosion of dollar dominance will reach a tipping point that triggers a fundamental restructuring of the global financial system. None of these outcomes are comfortable, none of them are easy, and all of them will affect ordinary people in ways that most people are not prepared for right now. What you need to understand is that the gold war between the United States and China is not just a story about commodity prices. It is a story about which country will be in the strongest position when the next chapter of global history begins. The country with the most gold, the most resources, and the strongest financial architecture will be in the best position to shape that future. And right now, both sides of this battle are fighting hard because they both understand exactly what is at stake. This is Pulse America News. I am Kundi. If this analysis gave you a perspective on the real forces shaping our world right now, share this with someone who needs to understand what is actually happening behind the headlines. Drop your thoughts in the comments below, and make sure you are subscribed to Pulse America News so you never miss a breakdown like this one.